I was looking at the reasons today why the commodities all went up, which includes all the precious metals: gold, silver, platinum, palladium, copper, oil, you name it. Everything was going up. And a lot was due to not anything to do with the euro, of course, because it seems whenever the euro moves downward, metals move downward. But there's a lot of strong import data that came out from a big major metals consumer called China, and also combined with a bullish forecast by the aluminum company Alcoa. So that produced a very good outlook for the commodities. So copper actually rose too. And remember I was saying about buying nickels. Nickels is probably a smart thing to buy. Copper prices rose 3.2%. The best performance since late November 2011, after China reported copper imports rose 12.6% last month. Now, I'm going to get on a couple angles here, so I'm not going to just read this stuff, but that's usually how I'd like to think what's going on, really. But crude oil went up some. Now, I'm mainly out of my crude oil. I have a little bit of double leverage, not much, and most of it's in that Goldman fund that doesn't erode like double leverage could be, like UCO. I'm kind of betting that this oil might go down. I don't know this for a fact. I mean, obviously it went up today, but I noticed that it didn't go up percentage-wise as much as gold, silver, platinum, or palladium. It pretty much followed the gold, and there is actually a pretty good correlation between crude oil and gold. But the demand for crude oil is actually very low, like what's going on, and because in the world, what's going on in the world, because like Europe is experiencing a recession, China's experiencing a slowdown. Now, I want to kind of put that in light with what's going on here. China has imported, they're showing they imported more metals, so that boosted the metals prices. But why did they import more metals? Was it because they're producing more? Or is it because the metals prices took a dip and China has a lot of cash reserves and they bought more metals? I think it's the latter. I think it's the fact that the metals prices took a dip. China has the cash. They decided to buy metals. It's not because they're producing a lot of stuff that's being consumed by the rest of the world. There's a recession going on in Europe, and it looks like their imports are slowing down in Europe. I just saw that story about a few weeks ago, and the carrier trade, the shipping trade, definitely shows that hardly anything is being shipped to Europe compared to what it was. So this could be very short term for the commodities too. This could be very short term. So where I think that you're going to see the silver and stuff go up is you might see some kind of good news coming out for the euro after this January 30th meeting, and that'll bring it up. This, I kind of look at this very skeptically because they're talking to China consume more metals, but that's because they're cheap and they got a lot of money, and the metals took a dive in price, so they bought them up cheap. And here's something else they're talking about. Caution prevails ahead of debt auctions in Spain and Italy later this week. So in other words, if they have a crappy debt sale, well, you know what I mean, they're not going to, obviously that's going to be bad for the metals. It's going to look like, oh, there's a big slowdown again in Europe or something. Just the fact that they can't sell their debt, that's bad news for Europe. So Fitch, the other rating agency, says it does not expect to cut France's AAA rating this year. That's what they say. And the other countries that are under review are Italy and Spain. And those are the ones that are trying to do, but Italy's too big. If there's a problem in Italy and Spain combined, you're going to see more bad news for the euro. But I think in like the short-term waves that go on, January 30th, after they have this meeting, just a guess, I think something good's going to come out of it. At least they're going to make it look good, and the markets will respond. And that's where you'll see silver start taking off. Now, I was looking at this oil, and You're talking about oil rise to near 103 on Iran tensions, China's increased demand. Now, I think the one thing that's going to come into play is probably China's increased demand. Because even if oil went down a lot, I think China's just going to buy it up and they're going to keep supporting the price. Now, I don't think oil is going to go down to like below $80 a barrel, but I could see it going back down in the 90s, no problem. I mean, it's kind of has a habit of doing, fluctuating up and down, and I do think the system is kind of. I think there's a little more going on besides market forces, because volatility is where you make your money. I mean, something goes from 90 to 150, but if something goes up from 90 to 105 and back down to 95 and up to 105, and you make the same amount of money. So, I mean, that's why I think the game's going on here. And I see these financial news stories are kind of like all time to... I'm quite sure that there are people that know exactly what these stories are before they come out. So, I'm thinking that there's going to be some other things that might bring down the price of oil. Now, this is something that's bullish for oil here. This little story talking about a national strike might affect oil production in Nigeria. Now, I was looking at Nigeria for quite some time because I knew that Nigeria is one of the countries that we import from, the United States, and it's a very big producer of oil, much bigger than Libya. So if Libya could have brought the WTI price up to like 112, Nigeria can exceed that. So oil can easily go to 120 or 130 a barrel if there's a problem in Nigeria where all oil is cut off, or without even getting in, and you combine that with the Straits of Hormuz, there could be some problem there too. This is kind of a rehash talking about tension between Iran and Western powers over Iran's nuclear program has helped keep crude above 100. Because actually right now the demand is actually not there to actually justify the price of 100. It is over geopolitical tensions, and they are like almost impossible to predict. You almost have to have reverse psychology, in my opinion. U.S. has recently enacted new sanctions targeting Iran's central bank, and I know they are really feeling it right now. And the sanctions, I just want to bring up this point again. Their money against the dollar has dropped almost 50% in several years. That's how much the sanctions are nailing them. I forgot the exact figures, don't have them right in front of me. But it was almost 50% in several years that their money, the Iraqi dinar, the Iranian dinar, excuse me, see how I'm confused, has dropped that much inside of several years. So these sanctions are really hurting them a lot. But the regime will want to stick in with his nuclear program no matter what. Obviously, to me, that's a no-brainer. That's not just for electricity, obviously. So it's hurt their ability to sell oil abroad, and Europe is planning to restrict oil imports from Iran. There was something else, though, and I think I found this very interesting. You're talking about the Iranian bluster may exaggerate the risk to shipping. And I know this is from a major media type of source, but I can't trust any source, to tell you the truth. Alternative media, yellow journalism, or major media. I just have to use my own head. But I talked about the oil price have surged 21% in the last 3 months. Tensions increased this week as Iran announced it has taken another step in its nuclear program, and that it has sentenced to death a former U.S. Marine of Iranian descent accused of spying. Now, and who knows if that's even true or not. So, I know some people already have their minds made up one way or the other, but you really don't know. I mean, don't think that Iran is a... I know there's a lot of criticism of the United States, but a lot of these people that criticize the United States, if they're living in Iran, they couldn't be critics. Okay? That's about the way it goes. You couldn't be a critic. I'd like to see you do Occupy Wall Street out there in Iran. But anyway, it says, this one, Dennis Ross, who was served 2 years on the National Security Council on Obama's special assistant to Iran, says, do you really think they're going to go ahead and try to shut down the Straits of Hormuz? He says he doesn't think so because they will be the ones that will suffer the most from that. So I think the only time they're going to do this is if they're totally desperate. Now, they're also talking about that if they do this, Saudi could take up the slack. I personally don't think so. I don't think Saudi can take up the slack. But say they could. I mean, how is that going to help them? If they close down the Straits of Hormuz, they're going to look like the bad guys. I mean, maybe somebody thinks about it, they'll probably be thinking, well, they got their hand forced. But still, there's a lot of propaganda involved in if Iran closes down the Straits of Hormuz first. You know, they're kind of making the first move then. So in either way, they're kind of screwed. But these sanctions, they're not going to work so perfect because China and India and North Korea and maybe even Japan are probably going to still keep buying the oil from them anyway. So I mean, they're not going to stop all their oil from going out of their country. So they're not going to work perfect. Iran's leadership has decided to prevent shipping through the strait if Iran's enemies block the export of oil through sanctions. And the European Union is thinking about moving up another meeting regarding sanctions to January 23rd, 2012, to consider imposing an embargo on imports from Iranian oil. Which is, you know, if they succeed in doing this, it's going to keep bringing up the price of oil. Now, I think a lot of this news is very irrelevant to the price of oil in some ways. I mean, it does, you know, it does affect the markets going up and down in the short term. But you know what I think is going to happen? I think Israel is going to be the one that might make the first move. I keep thinking that, you know, and it's they're not going to, you know, if they were going to do it, they would have had done it back in November or early December. That would have been the time to do it. But come time when they have another opportunity, when the weather changes, I think they just might make the first move, and they're going to look for any excuse they can to do it. So I think that's where you're going to see an unexpected move in the price of oil. So I kind of think they're really getting on edge about all this stuff. So I believe they might blow it and make the first move. So that's my personal opinion. Now, as far as when they're going to do it, it probably obviously isn't going to be for a couple months because it's the winter time again. But I think that's what's going to happen. But when also oil is extremely related to silver. If we see this oil price fly up to $150 a barrel because there's some major conflict going on in the Middle East, do expect the silver prices to really start taking off then. And that's where you're going to see some unexpected numbers. But I'm not sure when this is all going to happen. I think right now a lot of this is a lot of BS talk, and probably we'll see the price of oil drop down a little bit to 90 something before it starts taking off again. That's my personal guess. But since I don't know, I always keep a holding in oil anyway, in case I don't miss out on any kind of super gains that might happen.